Hi there, I'm Mark Sebastian, the founder of OptionPit.com, with the Option Pit Trade Idea of the Week. Reminder, this is for educational purposes only. None of this should be considered investment advice. Consult your financial professional. Options have risk. Hey, make sure you check out our events page. We've got this Mastering Long Gamma and Owning Premium Saturday class coming up next Saturday. Also, I did a webinar yesterday on how to trade earnings and how to use options to trade earnings. And that is in the middle of the page. You just scroll down, you can watch my whole webinar. It was a really good webinar, and we had a lot of fun with that one. So go to optionpit.com/gamma to check that out. Now, here we are. Here is the way the market looks. And you can see we're down a touch, but volatility continues to just get torched. We are 36 cents away from a 9 handle on the VIX. VIX Mo, maybe a little better indicator of where things really are, still around 11. I would note VVIX is being a little bit of a bid in VVIX today. First time in a while. It's back above 80. So that could be a sign that, maybe vol is finding a bottom. All right. Maybe volatility is finding a bottom. But, one of the things to know with volatility is you buy it as it rallies and you sell it as it sells off. You don't try and catch counter trends. All right. Now, we have a lot of stocks with earnings next week. And we have a lot of stocks that announced earnings today. Take a look at Google, which was down 20 bucks last night, down 13 bucks on the open, and is now down 6. This is a stock that will be green relative to where it was before earnings by next week. All right. We could see that similarly across many of these names. All right. There's a lot of bullish action to the overall market. All right. However, I think that there are some names that, just there's enough momentum that they're worth owning. And Apple may be one of them. So what I want to show you is take a look at the implied volatility of Apple. We'll do this real fast. So Apple volatility has actually been falling, and it has earnings next week. All right, 19% right now, 1905. And if you go out 2 years, where it is now would have been dirt cheap anytime in 2015 and for much of 2016. It's about as cheap as it gets. There's not a lot of the downside for vol might be 16 or 17%. Well, guess what? I can buy 17% and 18% in March and April. And even so, when I look at where volatility is, I have a hard time not wanting to own, like March calls. So the trade I like, I'm going to look at the March 10s because I get my dollar strikes then. And I'm going to look at these March 10 calls. I'm going to look at the 123s. These have 5 weeks to expire, almost 6. All right. And I can pay $2.30, so less than 2% of the cost of the stock. I don't think that's going into earnings next week. How is that a fair price? So I'm a buyer. And there you have it. I paid $2.30 for one of the March 10 123 calls. That is my trade. My goal, I'd love to not be in it for earnings are on Tuesday after the market. With any luck, I could be out of it by then, before it even announces. And if not, I'm probably willing to carry it. I don't think earnings can, it's not like expectations are that high on the name. All right, folks, if you have questions, you can email me, mark@optionpit.com, or you can call me, 888-TRADE-01. Have a great weekend, folks.